Hello to all traders and welcome back to another engagement for the non-farm payrolls. You're joined by your host, David Kinley, and we'll be joined shortly after by my special guest, Daniel, who'll be taking us through what to expect from the NFP numbers and where we are heading for the second half of the year. So thank you very much for joining me. Apologies for today. My camera decided not to work on me at the last minute, so really annoyed about that, a bit frustrating, but we'll get on with it anyway. And we are all still here, so that's the main thing. So thank you very much for joining me today. So we'll get right into where we're going, where we're heading, and what we're expecting from this NFP trading session. As usual, we have the chat open for any questions, any markets that you'd like me to go through. We're going to look through the usual markets, the dollar, the euro, gold, yen, and others, the main movers of this NFP session. So just before we do that, just get into a quick disclaimer just before we move on. So foreign exchange trading activities can be highly speculative and result in losses as well as profits. Foreign exchange and derivatives trading is not suitable for many members of the public, and only risk capital should be applied. This webinar is for purpose provided for information purposes only, and no information contained herein constitutes a solicitation for the purpose of the purchase or sale of commodity, security, or investment, nor should it serve as any basis for investment decision. All Allbix Limited does not guarantee any accuracy or completeness of any information I supply. So without further ado, let's get right into it. So we're looking now at the moment. Yes, thank you, Nikhil. So like I said, my camera decided to stop working. So you just got the background numbers at the moment, so apologies for that. We're going to look on the charts very, very shortly. Just want to quickly have a look at what happened in the previous round of the NFP and what we're expecting for this time around. So the last time around, we had quite a big jump in consent in the number. It went up to 339,000 new jobs added, and that was supposedly roughly going to be about 250,000. So we had a jump of over almost 100,000 new jobs being added for the last NFP. So will we get any surprises this time around? Well, the unemployment rate slightly ticked up to 3.7% from 3.6%. So we are expecting another move back down to 3.6%, but obviously we'll see what happens before that. So like I said before, the previous consensus was 190,000. We had 339,000 new jobs being added. Now we have a look at a possible move to 225,000. But this is in the case that we don't get any surprises. So if we just look at briefly at the chart here, as I said, I won't take you through too many PowerPoint presentations because it does get a little bit boring. I want to get straight onto the charts. So we'll just go through the numbers here before Daniel comes online to take us through a little bit more detail. So as you can see, from the pretty much the holiday season in America, we've had quite a big decline in jobs numbers being added. Okay, it has stayed under over 200,000 each time, but we had a nice uptick in prices and jobs there of 339,000 new jobs being added. So will we have this move to the upside again? Let's wait and see. So very, very exciting times. And just one more slide to look on, because I just want to point out that the US jobless weekly jobless claims still hover above 200,000. So as you can see here, since the beginning of the year, we have had just an uptick of these numbers. And don't forget, this is a weekly jobless claims number. So unlike the NFP, where it comes in once a month, the weekly jobless claims still hover above 200,000. What we're going to just kind of have more of a look on when Daniel comes on is the fact that we've had an 11th monthly drop of annual inflation year on year, and this is the lowest since March of 2021. So if you think of when the pandemic was at its height, this is where we are back again now at 4%. So in previous readings, we've had 6.5, a tenth of a percentage drop there to 6.4. So very gradual, but then we had 6 to 5, which was very, very good. And now we've pretty much had 5 to 4. So will the Fed get back to that 2% inflation target, and then will there be a terminal rate as well on top of that? So we'll wait and see. We'll go into more detail a little bit later, but for now, let's get right onto the charts, because we're just seeing now what can possibly be desired for this NFP. And I hope you can see my chart. I think it's okay. So what we're looking at now, we'll go straight on to gold, because gold has been such a dramatic mover in the last few trading sessions. So put it back to a 4-hour chart here. I just moved some of my previous notes, because we were looking at this double top or triple top here that we saw in this was at the beginning of June, and we were looking likely that these prices will probably start moving um, downwards because we got this confirmation of this triple top here. But since then, price action has steadily started going lower and lower. So not only did we hit the 1950 and had a confirmation, but we also hit 1900. We've had a bit of a bounce since then, which is quite expected. 1900 was quite a big psychological level for a lot of traders. Obviously, when we hit the 2000, 1950, 1900, 1850, these kind of levels, they're very big psychological factors in the game. And we're just seeing now that the market is telling us that we are possibly going to start moving a little bit higher. So let's just put some points of interest in here, because for me now, we're just slightly in this kind of bullish transition that price action will pretty much start moving a little bit higher now if we can avoid these potential drops here. So this is just roughly at above 1900, and then this is below 1900. So this is where we're looking at mostly where the price action will begin to start taking shape and to start moving a little bit higher as well. But tell me what you think as well. Obviously, as I said, we've got the chat open. So thanks for joining. And apologies for that. I spelt thanks incorrectly, so a little typo there. So we're just looking likely now that this bounce of 1900 is going to keep on progressing. Excuse me. If we do get a confirmation of a move below 1900, well, let's bring it onto the daily chart now. We are seeing likely that the reason we saw this big move in the market at the end of March that propelled prices back to 2000 is because of the banking crisis that happened where Signature Bank fell short, and a host of other banks actually started closing as well. So this is what propelled gold quite high because the US banking system was in trouble, and we are still seeing now what is likely to start happening in the near term as well. So if we look at where we're going now and where we were for gold, it's looking likely that price action will start moving a little bit higher because the US banking system is not really safe just yet, but the noise of the news has kind of calmed down a bit. Now we're just basically trading on price action, and there has been a big sell-off in gold as well. So computery, please let me know what your question is. You put a question mark on the chat. Please let me know if you have a question, and we'll be able to answer it live as we go through the webinar as well. So that's what I'm looking at for gold at the moment. Not really looking too far into the future because we're seeing likely now that there could be another big move back up to roughly about 1950, 1960 that the economists are saying on an early projection. And we're just waiting to see what the next move is as well. So that's gold. Very, very good commodity to be trading on this week. In fact, actually for the last few weeks, because we've been hitting lower low after lower low. As you can see here, the market is really trying to maintain this kind of sideways action movement, but as you can see here, it started to appreciate to 1900. Really, when it got to roughly about 1920, 1921, it was kind of predicted that we were going to see 1900 being tested in the next few trading sessions, and it did do. So this was quite a predictable move in the market for gold. Once the sell-off begins for gold, it seems to just keep continuing, a little bit like when it moved over 2000 and kept progressing there. So this is what we're looking at the moment. So euro dollar chart, I've got it on the 1 hour chart at the moment. Let's bring it roughly to the 4 hour chart just to see where we're going here, because at the moment, again, we're in a bit of a descending channel for the euro dollar. So this is on the pretense that we are now looking likely that this particular currency pair will keep trending to the downside. We are seeing this 108 handle being held quite significantly. So this for me is the next big psychological edge that a lot of traders might start really paying attention to. If we do break the 108 handle, we could actually start seeing more of a decline. And as you can see from the back end of May and early June, which is this area here, we did see a really big depreciation on the currency pair as well. Let's just put it back to the daily chart because daily chart gives us a little bit more of something to sink our teeth into. It had a very, very big choppy price action at this particular area. And as you can see here, very firm resistance as we got roughly just below the 111 handle. And we had this kind of almost triple top to start giving us some full support. But since then, as you can see here, we're in this kind of descending symmetrical triangle at the moment. Sorry, horizontal descending triangle at the moment, which has given us the impetus that price action will keep on pushing lower, which means it's not very likely that the dollar will be that weak as we go into the second half of the year because the dollar has moved a little bit lower as well. Pavel, thank you for joining us. We just had a look on gold actually, but we'll just take you through it quickly, briefly again, because we've got a couple of other of our guests asking about gold. So, as I said before, if we just put it back on the daily chart, we saw this big momentum when the US banking system was in trouble. Signature Bank and a host of other banks actually had to default. We saw them move above 2000, but since then, as you can see, big declines on gold. But since we've hit 1900, we've had this big support, and it was kind of predictable that we were going to hit 1900 and test it. And from then on, we saw a uptick in price action as well. So as you can see here, we are in this slight ascending channel now, and I'm just waiting to see if we're going to start testing the likes of 1950, 1960, possibly in the next couple of trading sessions. So this is where we're looking at the moment, Pavel. But keep your questions coming. We're just going to look through a host of other markets before I'm joined by my special guest speaker, Daniel. Hopefully he can join us today, but we'll wait and see. So 1 hour chart for the yen pair. Again, with the dollar yen, it is collapsing quite significantly in the last couple of days since the beginning of the week. We have had quite a weak dollar in the sense that it is looking likely that it won't be such a bullish jobs number that it was last time around when we had 339,000 new jobs being added. Compared to 190,000 in the near term as well. So with dollar yen, not really too much to take away. We are seeing that it's broken out of this kind of horizontal pattern here from a few trading sessions ago. But since then, as you can see, this collapse and continuation back down to 142, the lower end of 142. Now just picking up the pace and just trading above 143, which gives a lot of impetus that price action we keep on pushing higher as well. So we're just waiting to see if the dollar is going to have a bit of a turnaround and where it's going to be as well. But speaking of turnaround, speaking of good progressive moves, we've been looking at the US indices since the beginning of the year. The last couple of trading sessions have taken a couple of hits in that respect, but we are seeing that overall it's looking likely that price action will keep on moving to the upside just due to these artificial intelligence stocks, Apple, Microsoft, etc. Obviously, Apple hitting the $3 trillion valuation for the first time, but it's a little fragile as we're just seeing that progressive jobs data could see the Fed start hiking rates once more. This is why we had a little bit of a downturn in the last couple of trading sessions. But if we put that aside, the Dow Jones, the S&P, and the Nasdaq, as you can see here, very progressive from the last couple of trading sessions, moving higher. Obviously, we were in for a correction at some point, but as you can see here, the US 30 or the Dow Jones has really progressively started moving higher, especially since we had that banking crisis a couple of months ago. As you can see, this big drop off in Wall Street. But as I said, Apple, Microsoft, Amazon, all these big tech companies are really pushing for AI, introducing products. And this is something that we're going to have to keep an eye out for as well, because these stocks and companies that are making these AI features are going to probably keep on making a lot of money for the foreseeable future. So we're just seeing now if that's going to keep on pushing and moving higher as well. So Dow Jones looking very progressive there. As I said, apart from the last couple of trading sessions, we are seeing quite a big move in the market in general. If we look at the recent highs, apart from this false spike here, this is the highest price action that it's been since November. So a 6 or 7 month high roughly, and it's really, really been favorable for the US economy as well. So is the US economy heading for a recession still as we enter the second half of the year, or are these fears actually starting to calm down? We'll have to wait and see, because it's very, very interesting. And where we're going next, we'll have to wait and see. Just want to look at the dollar CAD or the loonie, dollar Canadian, because we are actually having at the same time as the NFP, the unemployment rate and the participation rate for Canada as well. So it's always exciting when we also have Canadian news at the same time as the NFP, because it does shake up the market even further. But progressively, the dollar Canadian is starting to move a little bit higher, giving us a bit more of a push to the upside. And hopefully, we're going to see more of a move in that direction as well. So that's the main argument that I'm going to have for the dollar CAD. Not too much to talk about on that particular currency pair. We're just going to wait for the actual news to be hit, because it does give us more of a move and a progression to the upside as well. So just under 15 minutes now until the NFP. Very exciting times. So just a reminder quickly about what we're looking at the moment. So we're seeing that the previous reading was 339,000 new jobs being added. The consensus this time around is 225,000. But this is still a good jobs number. It's not like it's a very detrimental or bad jobs number. It's still quite a good jobs number, and it could actually keep on moving us higher for the dollar at least. So this is what we're progressing on at the moment. So I just want to look on cable as well, because it is pretty much going in the same direction as the euro dollar. When we get a progressive move, well, not a progressive move, sorry, on the dollar, usually the main forex companies, forex pairs are moving in the opposite direction. So euro, cable, yen, Canadian, etc., Aussie, Kiwi. So these are obviously moving in quite favorable. But what's interesting for the cable is that we are in such a bullish transformation now, since having this kind of slight downgrade on cable, and this was when the banking crisis began. As you can see here, we've had this really strong move to the upside, and it's probably one of the most progressive currency pairs that's actually happened in the last couple of months. You know, we're looking at by the end of May, at the end of May, beginning of June, that it has kept its cycle to the upside. We had a bit of a drop at that particular time, but since then, as you can see here, roughly, you know, let's just have a quick look. Just over 50 pips move to the upside. 500 pips move to the upside. So that's quite a progressive move, and it's not really a small move. You know, 500 pips if you're trading that particular currency pair, and that's only in a few weeks. You can just gives you an idea of where we're heading for the next half for cable as well. So last market I'm just looking on now, just looking on Bitcoin as well, because Bitcoin is just something against the US dollar. It's just something that we're keeping an eye out for, because we did predict that Bitcoin would hit 30,000 and then have some kind of resistance. But as you can see here, since it hit 30,000 for the first time, well, in a while, let's just pull it back a little bit. So we hit 30,000 at the beginning of March, and then we had this descent, and now we've hit it again in the last couple of weeks. And now we're just trading a little bit sideways. As you can see here, big fall from the dizzy heights that we saw a couple of years ago now, at up to 65,000. And now we're just seeing where we're going for this cryptocurrency. But back on the daily chart, for me, we're just seeing this kind of horizontal price action now, just moving a little bit slower than what a lot of economists would think, because if you've ever traded Bitcoin, or if you're familiar with Bitcoin, you know that we can have really big moves in the market in just a few hours. You know, we're talking about thousands of dollars worth of price action being erased or jumping, actually. So with Bitcoin, it is a little bit more volatile than a lot of the other currency pairs and commodities, etc. So I just had to adjust my headset, but we're just seeing now where the next move is. So I've just been joined by Daniel, so I'll just let Daniel in now. Hi, Daniel. Thanks for joining me.
Hey there, David. Sorry I'm late. My screen back then did quit on me. It's
No
back,
problem.
but I don't know how long it's going to be there.
Well, actually, my camera quit on me today, so you're probably
Oh,
just looking into a blank screen at the moment.
right. I guess it's a tech issue day.
Exactly. Tech issue Friday. So yeah, but thanks for joining me once again.
hmm
We're just going through a few of the charts at the moment. We're seeing that gold has seen quite a big descent from a few weeks ago. It was hovering around 2000 a couple of months ago. Now it's back down to 1900. Um,
Right.
We've seen indices spike quite recently as well, Dow Jones, S&P, and Nasdaq. In the last couple of days, though, we've had a little bit of a fall, and early warnings are that the Fed is waiting for another hike in its next
Yeah.
meeting. Since that, inflation has fallen to 4%, so it is on course for this kind of 2% target by the end of the year. I mean, at the beginning of the year, we were kind of laughing about it a little bit, but now,
Yeah,
would you
and that's
say
gone
it's
down really fast. Yeah.
yeah, would you say it's quite realistic now?
Well, it seems to be, but you still have the issue with the core rate, which is still up to like 5 something%. I think it's gonna. The expectation is that it'll come down to 5.3 next week. Next week when we have the inflation numbers come out. So that might be a bit of a problem. And of course, the other thing is a bit of the data that's coming out now that might be kind of crucial is the wage adjustment. So wages are going
Mm.
up at about 4% annual, and so that's going to naturally put increased margin pressures on the companies who are going to have to push those prices off to consumers. So you still have sort of an increase pressure for inflation. But I suppose the headline, yeah, the headline could probably fluctuate a little bit more than the core rate. So yeah, the Fed might actually be right. I mean, the market so far has been saying that there's going to be a recession. They said it was going to be at the first half of this year. Well, the first half of this year is over, and there hasn't
Yeah.
been a recession yet. So and they've been saying that the Fed wouldn't raise rates above 5%, and well, now we're at 5.25. So now the market is saying that the Fed is only going to raise once more, and the Fed is saying they're going to raise twice. And so it seems like so far the Fed has been more correct about what the Fed is going to do than the market has been.
Yeah, exactly. Well, I mean, just touching on that, we did say that they did say the terminal rate would be below 5%
Yeah,
originally, but
yeah.
now we've ticked over that, and there is supposedly another price hike in store. But is this because the fears of a recession are kind of fading and inflation is coming lower? So the Fed is thinking, oh, let's just go for it and see what happens.
Yeah, I guess like the Fed has a sort of different interest than the market does because the traders we want to make money, and the Fed is trying to keep the politicians happy more than than anything. So there's a little bit of a differential interest there, but I think it really is going to come down over the data that comes over the next couple. Well, I guess maybe the next couple months because inflation could really come down next month. There's some people that are saying that they'll go down to 3%, and
Mhm.
3% before the whole thing happened. You have to remember the Fed was talking about that they would be accepting a 3% inflation rate for a short period of time because of the deflation that happened during the COVID period. So, getting down to that range is start to really, I guess, talk about the Fed not wanting to raise rates anymore, especially if the market finally is correct and you start seeing more economic indicators that aren't doing so well. The thing about the economic indicators is they're sort of like half and half. Some of them are pointing towards being pretty good, and then you have like the industrial data hasn't been very good. This was in the ADP report because yesterday ADP came out and it was like this big blowout number. It's kind of lost
Mhm.
its predictability for the NFP, but I
Yeah.
mean, it might indicate that there'll be a big one coming up later. But the thing about the survey, it might not be correct on the overall number, but it's still kind of correct in terms of surveying of how the economy is going, and it was very fractional. So you had big companies were cutting employees, and in the industry manufacturing were cutting employees, and finance was cutting employees. But in the service sector, particularly in small businesses, they were hiring lots of people. That's where the big blowout number came from, mostly from like restaurants and hotels, and I guess Airbnb would kind of fit into that category, because if you have an Airbnb, you're kind of a business.
Hmm.
So if you're hiring, if you have two or three Airbnbs, that sort of thing. So it's like services, and it seems like people actually, normally Americans like start traveling, go on holiday a lot starting in Memorial Weekend, but they might have just been a little bit later this year and started going out for the 4th of July, and so that might be why there's a little bit of a delay. But it's all kind of it's a little bit distorted. You still have the leftover thing from the pandemic that's kind of distorting it a little bit. So it's hard to really make a firm prediction. It's a little harder
Yeah.
than usual.
Yeah, exactly. We've just got under 5 minutes to go before the NFP results. I just wanted to pick your brains about, we've got the 4th of July week. We've had a little bit of a slow trading week because of that.
Yeah.
It's kind of been predictable. But on the last time around for the NFP, we had such a surprise jump in new jobs numbers. I think the forecast was 190,000, and we got over 300,000 new jobs added. But because of the uptick in unemployment, 3.7%, the market didn't react too progressively towards the dollar, even though we had another over 100,000 new jobs being added from the forecast. Because of
Yeah.
the unemployment rate ticking a little bit higher, it was a bit muted, would you say? Whereas, we got excited in the beginning when we saw the NFP number,
Yeah. And
but then
then
it didn't
then
really take off, let's say.
Yeah, you could have something similar like now, because it's so the data is kind of fractional. So you'll have like you could have the underperformance in the NFP, and then the unemployment rate also goes down because of that problem that you have with so many jobs being open, but not so many people covering them. So it's not really responding to your normal economic dynamics, where if you created a whole bunch new jobs, or job offers, people will immediately take them, and then you'll have a large NFP. Now it's like
Mhm.
there's so many jobs open, and it's just a matter whether people are going to move to where the jobs are and then take the job, or if the company is going to be willing to raise wages enough to attract people. And those are sort of like different factors than your regular economic ones. So that's why it's kind of extra harder to predict, and why you can sort of get these like the unemployment. You can have a small number of people getting hired, and then the unemployment rate goes down because the the number of people that are looking for work has gone down.
Yeah,
Because the people that were, it's a smaller number of people who got jobs, but they got jobs, and those are the people that were on the unemployment list. Or you can also have the unemployment rate going up, like last time, where when you get a high number of people getting jobs, because the people that were getting jobs, they weren't signed up for unemployment benefits, so they weren't counted as part of the statistics. So you get this kind of like really weird, and then the markets, of course, are going to react, kind of um, contrary, because you get this one data point pointing one direction, the other data point pointing the other direction. So it's extra hard to trade the NFP this time around.
it is. Yeah, it is. Would you say the 4th of July week is going to affect the NFP numbers, or is it just a case of it just being a coincidence that this holiday has fallen on this particular week?
It might be, but also, well, last year I don't remember if it was in the same week. But I mean, usually after a holiday, people are sort of like more positive, and so there might be a bit of a tendency to be a little bit more positive
Hmm.
than not. And so yeah, probably not all that big of an impact. I think it'll be more of a reaction to inconsistent numbers, and also people are going to be maybe moving to looking at other data points than just the headline, because the headline's been it's like 14 months in a row that the prediction has been below expectation. Like the number comes out above expectations. They've underestimated it. So
Right.
it might happen again this time, and people are like, well, I mean, we're kind of used to them
Mm.
not getting it right. So
I've also pointed out that we've got some Canadian news as well for the job sector. So
oh right, yeah,
I think
yeah, there is.
it's always exciting when it falls in the same. I think it happens once a month or something like that, but it's always a bit more exciting because obviously the dollar CAD goes a bit crazy, and
Yeah, you
obviously
get extra data points. It gets kind of overshadowed by the bigger country. Yeah.
exactly, yeah, it does get a bit overshadowed, but we have to keep on going with it.
Mm.
Obviously, when the news falls at the same time. So just getting the news just coming in now. Just bear with me just a couple of seconds. Okay, so Markets are reacting. Just waiting for the non-farm payroll number to come in. Okay, so 209,000 new jobs being added versus 225,000, which was the consensus.
So a
So
little bit below.
a little bit below. Unemployment rate has dropped to 3.6% though, from 3.7. Uh,
Right.
hourly earnings are monthly, yearly are the same. So it's pretty much a little bit of a blank for the dollar, which is why we're seeing gold um, jumping roughly about
Yeah.
$10, and dollar pairs like euro dollar, cable, etc., starting to move out of favor for the dollar as well. So
Yeah.
just have
I mean, one of the things that's been happening is right up before this, the whisper number, like the official forecast was 100, was it 230? But
mhm.
they're starting to move up the whisper number to like 280. So it could be a little bit bigger disappointment than what it shows strictly in the numbers. By the way, thought I should
Yeah,
throw that in there. Yeah.
that's true, yeah. But a little bit of a role reversal from last time around, even though we have a bit of a detrimental
Right.
NFP, we've had the unemployment data kind of tick below a little bit by 0.1%. So that can help a little bit of the dollar uh, not have such a catastrophic Friday afternoon.
Yeah.
We're just seeing now just a few of the other markets just starting to move. Just looking at the Dow Jones, that's not moved too much, just moving it up a few points, really muted there. Gold is pretty much the main mover. That's actually jumped roughly about $10, just moving down a little bit lower now, but quite a big move for gold, especially if it wants to move away from 1900. We had a few of our guests asking about gold, Daniel, because
Right.
since the banking crisis that happened about 3 or 4 months ago now, approximately, when Signature Bank and a few others actually, I think it was end of March, I believe,
Yeah,
roughly.
somewhere around there. It's
Um,
March. Sometime
March,
in
yeah,
March.
sometime in March. It was a bit of a haze. We saw
Yeah.
gold obviously hit another record high above $2,080, but since then it's pretty much been a bit of a sell-off. I'll just put it on the daily chart. I don't know if you can see my gold chart or not, but
Yeah,
it's pretty been
the charts are showing fine, so
oh great.
don't worry.
It's been a bit of a sell-off since then, downturn after downturn. 1900 was the main next psychological level, because obviously when we get to 2000 or 1900, 1800, etc., we do expect either a confirmation to push below or a bounce and a move higher. So at the moment we're seeing a bit of a move higher. Uh, we're trading towards 1925 now, so $25 move since the beginning of the week. So do you see more progression in gold, or can dollar take over for the next 6 months, especially if the recession fears are stopping, if the Fed's plan is going to work correctly? Because obviously 1 year or 2 years ago we didn't really have much confidence that the Fed was going to really start
Go through,
progressively
yeah.
moving. Yeah, exactly. So, what would you say for the next half of the year, Daniel, for the dollar and gold, or the dollar especially, because it's a little bit easier to track, especially with all the big fundamental news events coming out, or should I say the Fed?
Well,
that's the fundamental
that's
news
what
event.
exactly it. Like you said, it's the Fed,
Yeah,
pretty
it's the
much.
Fed.
The big move. I think the reaction to gold just now is most likely because the lower employment number, people are sort of interpreting it as probably a sign that the economy isn't doing so well, because like I was mentioning previously, you're getting this contradictory information of some sectors doing good, some sectors not being, some economic data coming out good, some not coming out so good. And so this is one that's sort of like pushing towards the negative side. So people are probably thinking, oh, there might be a recession. That usually, would helps gold a little bit. That's why, we had that big move back in June, and got up to the June, sorry. I mean March, when it got up to the new highs, people were thinking, oh, okay, now the Fed is going to have to cut, because we're going to get, the banking crisis will lead to financial crisis and so on. And
Exactly.
so I guess that's probably the thinking that's going on now. Is again, the question, the Fed wants to keep rates high, and then if the recession is bad enough, then they're going to be forced to cut. And if you're betting on the Fed being forced to cut, you probably want to be in gold or treasuries, but
Hmm.
gold is a lot more accessible for people, particularly if you're trading the CFDs. Gold, it would be a better option, because then you can take advantage of the dollar it's a more pure play defensive against the dollar going down because of a recession. If you're
Hmm.
shorting the dollar with something like the euro or the pound, those also would presumably be affected by a recession. Like, I mean, Europe already is technically in a recession, so then you don't have so much of an upside as if you do with gold. So that's probably why gold had a bigger reaction this time, and then you can then from that extrapolate what you will into the future.
Yeah, exactly. Well, that's the thing. What you just touched upon. For the last 6 months, we've been hearing recession, recession, recession. Any minute now, any time now. But then it's kind of moved across to Europe now, hasn't it? And the UK, where
Yeah,
they're in a recession, and America has been saved because of the Fed, and the other central banks were so slow off the mark to start raising
yep.
rates.
Exactly the thing is that
That's
the
it.
central banks were too slow, and now they're paying the price. The sort of like it was kind of surprising of what happened with the BOE because they're the first ones to start, and everyone's like, okay, these guys have got it handled. The UK is not going to have much. They're going to get their inflation under control, but they just kept going so slow each
Yeah.
time. I don't remember if they ever actually managed to do with 50 basis points, and so then now they have to deal with it,
Exactly. Now,
unfortunately.
now they're playing catch up, and obviously
Yeah.
now they're going to have to start raising by 50 basis points maybe at a time, because obviously their inflation is still quite high. I think it's like 8 or 7 or 8% still,
Yeah, something like
and
that.
it's
But I mean, it's good for people who want to trade cable. So there's that. There's a positive
well,
side for us.
exactly. That is true. That is true. You have to think, if you're changing your money over, or if you're investing in other, with the dollar against these other currencies, then obviously it's favorable at the moment. So
Yeah,
there is actually some plus points with some economies having high inflation still.
true.
Okay. All right. Well, thanks, Daniel. That just brings the end to this round of the NFP. Thanks for joining me for this time around. And
Sure.
I guess we'll see what happens in the next time. I mean, we're just waiting for another, possibly. I believe the Fed interest rate decision is the end of this month, is it? And we'll
Yeah, I think it's the
see
26th of July. They'll probably
something
be a
like that.
pretty big event because well, I mean everyone's predicting that they're going to raise rates, but then the question is what's going to happen in September. And so,
Yeah.
next Wednesdays when we get the CPI, they'll probably give us kind of a more definitive answer what will happen with the Fed. So it's probably the next big event coming up.
Exactly, exactly. So next time we speak at the next NFP, we'll have a lot more, probably a better signal, let's say,
Yeah.
because obviously we're one whole month into the second half of the year, and then
Hmm.
we'll have more of a definitive signal on if we're going to get this 2% interest rate check, or uh, are the Fed going to be close to more of a terminal rate finally?
Yeah, and also this earnings season will be pretty much halfway through there, so we get all the big
True.
companies. So that
That's
will
true.
also
Yeah,
give us some indication. So yeah,
exactly. Okay, great. Well, thanks for your insight, Daniel, and
yeah.
thanks.
Thanks for the invitation.
No problem. And we'll speak again next time around.
Yeah, with no tech glitches next time.
Yes, I'll make sure I have a camera, and you make sure you have a background screen, I think, or
Yeah,
whatever it
I'll
was.
get my
Yeah,
screen back working.
exactly. Okay, Daniel. All right. Thanks a lot. Always a pleasure. And we'll speak again next
Likewise.
time.
Yeah, take care.
All the best. Take care. Bye for now.
Bye. Bye.
Bye. Bye. Okay, so that was Daniel joining me. So, Pal Singh, yes, slippage news, not good to trade. It was very, very quite a big jump. Let's just look on the euro dollar. Bring it down to the minute chart. As you can see here, the first couple of minutes for the euro dollar, we've had 45 pip move to the upside, so quite a big move in that respect. And obviously, there are gaps in the market all across the board. So quite a detrimental day for the dollar. We are seeing now a bit of a pullback. We've gone roughly about 15 pips to the downside. So knocked off about approximately about a third of the jump that we've seen on the euro dollar. But let's bring it out to the 30-minute chart, because what we're seeing at the moment is we've broken through a few of these last test areas. If this was a descending channel from when before the NFP began, as you can see now, it is not anymore. We are seeing price action quite positive and jumping above the 109 handle for the first time in quite a while. So possibly, are we now going to have a bit of a bull run for the euro dollar, as we had a bit of a detrimental backstop for the euro dollar? Just want to jump on cable as well, because this is looking likely that this gap in the market could be slightly exhausted. Let's look on the minute chart there to see what we were looking at as well. So as you can see here, from the time we started to the time we stopped, again, 45 pip move to the upside, exactly the same as the euro dollar. Now we are just trading roughly about 15, 20 pips to the downside. So covering almost half, or just under half of that as well. So thanks for your question, pal. So after US Open, best to stay safe as it can reverse NFP are tricky trades. Yes, definitely, exactly. Couldn't have said it better myself. If you are scalping during high impact news events, not only the NFP but any news events, just be careful of the not only the jump in the price action, but also the reversal as well. So here's a very good example on cable. So not only have we had a gap in the market of roughly about almost 20 pips, as you can see, we are now reversing nicely, and we probably will start reversing back down 20 pips, as you can see here. So if you were to put a sell position in, most likely we will be starting to trade this gap now, but obviously things can be very tricky when trading high impact news events. So it'll be interesting to see if this particular gap does get filled by the end of today's trading session. This will be something that I'll be looking at as well as we go on. But let me know what you're trading on as well. So we looked on euro dollar, we looked on cable. I'm going to leave gold till last because it is such a quite a delicate commodity to trade on. Just look on the dollar yen. As you can see here, fully broken through and confirmed. Back down to 142. So this is giving quite a move to the downside as well. So we're just looking likely that this will possibly keep progressing now to the downside as well. So yes, pal, that's correct. Wait till open candles need to close, most definitely, depending on what time frame you're looking at, minute, 5 minutes. As you can see here on the minute chart, we are now starting to progressively have this V-shaped recovery for the dollar yen. If you look on the 30-minute chart, though, as you can see, it is just still a block of candlestick at the moment. So we're just seeing now what we're looking at. So thank you, Miguel. I just have to answer these questions in English, unfortunately, but we'll get by. So we just had a look on the euro dollar. We're just seeing now the 45 pip move to the upside. We're just going to bring it back on the minute chart. We are now seeing a bit like cable. The fact that, as you can see here, look, like I said a couple of minutes ago, we are now covering this gap nicely, and it'll be interesting if we can cover this gap possibly in the next 5 minutes. We'll see how long it's going to take. A little bit like the euro dollar, it'll be interesting if this gap or this move to the upside can close, and if we're going to have a full reversal back down to 1088 by the end of today's trading session. So this is something that when we have big impact news events, when we have gaps in the market and big moves to the upside or downside, it's interesting to know if they're going to have a full reversal because the NFP and other news events can have this effect on the market as well. Let's look at the Dow. The Dow didn't really move too much. If we just look at the whole scene of things, roughly about 70 points. It's looking likely that it will be a bit muted for the Dow. This big move that we saw a couple of sessions ago is the main mover, moving over 600 points, which is quite significant in just a couple of trading sessions. It gives the impetus that price action will possibly stay basically in this particular movement as well. So we'll see if we get a move back down to 33,000. 700, 800 roughly, 33,800. That would be quite good for this trading session, as we're just seeing now where we're going as well. So dollar Canadian, we did speak about this, that we were moving a little bit lower. For me now, we're just seeing now this kind of V-shaped recovery to the downside. This will be very favorable for the Canadian dollar at least. So thank you for your question, Miguel. And any other questions, please keep them coming. We're just finalizing where we're looking at for the next move. You're very welcome for the analysis. As I said, please feel free to ask any questions, and thank you for joining as well. So So we're just seeing now, as I said, let's just take a look on Bitcoin before we jump on gold. So Bitcoin, as I said, not really a big mover at the moment. It's actually waiting for the next move at 30,000. We're just seeing now that this will possibly keep on giving us more of a horizontal movement to the and possibly hitting 30,000, 30,000 and 2 to 300 is where we're seeing this next move as well. So finally, gold. Before we close the presentation, just now looking to see where we're going for gold. So for me, as I said, before we started this NFP session, I did say that I believe we were in a slight bullish channel at the moment. We're just now seeing where gold is going. And yes, Pal, I still think dollar is weak, just about positioning, and pound euro is definitely bull in my opinion. Yes, I agree too. And also, we're just seeing now that gold is in a bullish continuation as well. Um, so I'll leave that question out there if gold is bullish, because in my opinion, it kind of is. We were before the NFP did begin, before we saw this bullish candle here. I did believe that we would start creeping up a little bit higher in this kind of regard. Um, slight correction, however, movement to the upside, and we would probably start moving towards 1950 to 1960 by the back end of next week. So once the 4th of July holiday period is over and done with, this is my projection of gold, but obviously we'll see what happens in the near term as well if we break through this particular channel here as well. So this is the next movement that I'll be looking at. Obviously, we'll have to wait and see. Nothing is certain in the Forex world and commodities world as well. Yes, gold is tricky, but obviously we look at the dollar to give us a signal for the gold. Obviously, when dollar is a bit weaker, gold does have a bit of an opposite move. But we're just seeing now that let's just see how much of a bullish momentum the euro dollar is in. It looks likely on the 30-minute chart that gold euro dollar has started moving in a bullish transition, and we're just seeing now the full effects of it as well. Okay, this looks like a little bit of a false break here, but in the overall picture, if just move these other guidelines, we're just seeing now that euro dollar is looking a little bit more of a horizontal uptrend triangle there. Yes, it can be a bit of a pain, Paolo, to trade gold. It can be a little bit unpredictable. This move to the downside to 1900 for me was predictable. I kind of knew we were going to have a test at 1900 because it is such a big psychological level. And then a bounce, whether we were going to bounce higher or lower. Obviously, the proof now is that we moved higher. And can we keep moving higher with gold? We'll have to wait and see. But we'll obviously keep that for the next NFP, which will be in 1 month's time. So this concludes the NFP session for this time around. Thank you so much for joining me. It's been a real pleasure to go through all the markets with you, to answer your questions and to see where we are going to go for the next month ahead. Obviously, the Fed is going to have more of a say in the direction of the dollar and gold, and obviously indices. So just keep an eye out for all these big major market moves, and we're seeing where we're going to next as well. So thank you too, and thanks for joining. As I said, next time around, we can go through any markets that need to be. We've got the Fed interest rate result at the end of this month. Next week, we've got CPI data as well, really big data to see where America is going and if inflation is starting to creep lower. This will give us another signal for where the Fed is going to go, if it's going to raise its base rate even higher, or if it's going to have a terminal rate in the next couple of months as well. So is America finally out of a recession, or are there more surprises in store? Let me know what you think. This video will be posted on our YouTube channel. You can comment there, like and subscribe, obviously, and leave your comments there, and I'll be able to answer you back to see where this next transition of gold, euro, dollar, etc. are going to go. So thank you once again, and we'll speak again next time around. Bye for now.